welcome to fundamental analysis of Google stock. Currently, Google stock is after a significant price drop from the top of around 210 to a local minimum of 100, of around 140, and currently the stock price is at 160. And if we look at the long-term price chart, in here we have the last 5 years from 2020 to 2025. We can see that the stock grew from about 60 to 210 at max. So this company is growing rapidly, but this is because it is super healthy and has the ability to earn a lot of money. As you will see soon, the margins on this company are just crazy. And currently, if we look at the most basic ratios, like for instance P ratio, we can see that the PE ratio, the current P ratio of around 18, is the lowest since last 10 years. So if you were interested in buying Google, this might be the right time. And as we can see, the cash flows from operations, they are growing steadily. And here we have a chart from 2007, and we can see that steadily the cash flow from operations is growing at around 20% per year. So this is very quick, especially for such a big company like Google. We can see that this company is also investing heavily right now in 2025, 2024. We see the highest investment rate. So this company is spending a lot of money, which is decreasing their earnings. So maybe the P ratio is a little bit higher than in reality because a lot of the money spent is being invested. But also this company is spending a lot on cash flows, on financing. And here we'll go in detail because it might be more difficult to understand what is behind that cash flows from financing. In here we have different positions and the main positions that generate costs for Google are the repurchase of stock. So this company is buying its own shares. So it works in a way that the company buys from the stock market. Google buys shares of Google, and those shares are no longer tradable. So for instance, the amount of shares decrease. So when there are less shares, they should rise in value. So basically, by doing that, by repurchasing the shares, your shares, if you own any, they will be worth more. So it's good, very good for the investor, because your shares will represent a higher portion of the overall shares as the company is buying back its own shares. So this will increase like your stake in the company, your percentage ownership of the company, and in the long term, or maybe even in the short term, if the stock market is efficient, we will see that the price will reflect that this is a very good expense to have, as well as the capex on investments. And also we can look at other price ratios like PB, which is price to book value, and currently this is not the lowest reading, but it is currently at around 5, 6. So the price to book value ratio is around 5 or 6. So this can be high compared to other stocks, especially from less developed markets like China or some smaller countries in Europe, etc. But this high book ratio is because the company is great at generating earnings. The better the company is at generating earnings from the book value, the higher will be the price compared to the book value. And as we can see, the profitability ranking for this company is just amazing. The gross margin for the company is currently at 60, operating margin 32, net margin 30, return on assets 25, and return on equity 35. Those are just crazy margins, and they are getting better over time, at least for now. The company is also highly liquid. Current, quick ratio, and cash ratio, those ratios basically mean they show how much liquid assets or cash or other stuff the company has compared to the debt. So the company has enough cash to cover the next year liabilities. So the probability of this company going bankrupt is low because Google generates a lot of money and also has a lot of money in bank reserves. And as we can see, currently the cash is at 90 million while debt is much lower, although this is billion probably. So the company has 90 billion because probably those numbers here on the chart are in thousands. So it's 90 billion of cash compared to 30 billion of debt. So the cash, the company generates so much cash, there is no problem with liquidation, and the company has been profitable for the last 10 years, and it's really unlikely that anything bad will happen to this company. But there are some pressures from the AI. For instance, people are using AI to search for stuff instead of Google, but also Google has its own AI, Gemini, uh, but people are not very optimistic about it right now. The premiere of that AI wasn't like super hype, super great, so that also led to decrease in price, but that's good. If people are pessimistic in the short term, that is an opportunity for a long-term investor. As you can see, the revenues, income, EBITDA, everything has been growing. The revenues, you can see the growth very stable here. And there are two class shares for Google. They are called Alphabet, and there are class A and class C. The class A has voting rights. So if somebody owns a lot of class A shares, they can vote. If you have billions of dollars and you buy billions of class A shares, you can have some saying in what is happening at the company. While the class C doesn't have that voting right. So usually the price of class A shares, because they have voting rights, would be higher than class C. But for now, it isn't. There isn't much difference. I personally bought class A shares because I think it's better to have the voting rights than to not have them. All right, and that's everything. Thank you very much for listening to this presentation, and I hope that those basic fundamental indicators for Google will help you and that this material was useful for you. I think that Google is a well-renowned company from USA that has been on the market since many years and is really great. Also, other financial experts, like for instance Monish Pobrai or uh, other super investors, they really like this company, and this can be seen in the financial reports as the profitability, growth, everything of this company looks really good. And currently the PE of 18 is below the median value, which was 14. So the average is 24. So the average for Google is around 24. So right now we can get it at around 18. So it's lower than the average. So it might be a good place to consider analyzing or buying the stock of the company. Okay, thank you for your time and have a great day. See you later.